Hello, hello. Hello. Dear participants, please all do come and sit down. Sit down also in front. This is a really exciting panel about climate change and investing in people and the planet. Because without people, why would we invest in the planet? So, please do come. Please do sit down. Can I entice some more people to come and sit down? Start talking and they'll hear them. Yes. Inshallah. Okay. أهلا وسهلا. مساء الخير. Assalamu alaikum. Good afternoon. Welcome to the AEON panel at the Saudi Pavilion, which is entitled Bridging the Divide Between Development and Planet and Finance. When we look at this COP, this very much is a COP for finance. And we've seen how long it took for the OECD countries to come up with the 100 billion that was promised in Paris to be delivered by 2020, and it took until 2023, 24, until it finally happened. And, when you look at the developing world, only at the OIC, the Organization of Islamic Countries, it would be 1 to 2 trillion a year we need for climate abatement. The bigger, larger developing world needs even more. So it is a good idea to look at how can we get 1 trillion? Can we find a compromise? Who will pay? That's always the thing. It's always who will put the dollars behind the big ambitions. And this is precisely what we're going to talk about here. And allow me to introduce the panel. We have Her Highness Princess Mashael AlShalan, who is a co-founder of AEON Collective, who is also the chairwoman of Women in Energy, which is important. We need more women in energy. We have Ms. Beck, who is a senior advisor, Europe, Middle East, Africa, of the Clean Air Task Force, and who's done a lot of really, really good groundbreaking work on precisely these issues. And then it's a particular pleasure for me to finally have met somebody I've learned a lot about, heard a lot about, Dr. Adnan Aziz, who is the Chief Program Officer, Global Islamic Finance Program for Climate, Nature and Development. So without further ado, I'm going to ask the first questions. We're first going to have a few questions, and then we'd like this to be as interactive as possible. We'd like you to all participate, ask questions, because you have a great people here. Anyhow, Your Highness, AEON Collective has a truly interdisciplinary approach of the environment. You're considering hard sectors such as energy and infrastructure. You're looking at well-being of people, which brings in nutrition, health, and other sort of softer sectors. Where do you see the biggest gaps, both in terms of an intellectual approach, to have a truly interdisciplinary approach, and also in terms of funding, because it's great to have great approaches, but if you have no money, it doesn't help.
Yeah, I have to say I'm not, between myself and my partner, I'm not the one who's good with money, so probably Noura should have been the one to answer this. But if we're looking at the global arena, Cornelia, for us we see a very fragmented effort going into it, a high level of focus on climate as if it's a siloed element without understanding the deep needs of development and things that cross across the board. And we're looking as well at the Rio Convention. Upon inception was not only the UNFCCC, but it was the UNFCCC, the UNCBD for biodiversity, as well as the UNCCD that we'll be hosting in Saudi at the end of the year. And in between those three sister conventions, we're seeing huge amounts of gaps. So what we need to see is a lot more cohesion and complementarity in how we're approaching the issue, but also first and foremost reminding ourselves, when we are going into these investments, what are we trying to do with them? And are they the appropriate types of frameworks? Are we just talking about buzzwords? Are we talking about random numbers? Or are we delivering on said promise? And when we do so, I think we all have to be honest at this stage, specifically given that this is a COP that's focused on finance. we frayed a lot of the trust from all of the constituents around the world in terms of what we're promising and what we're talking about versus what we're delivering. So what we do at AEON Collective is to say, let's stop this fragmented, siloed approach of looking at the problem and be more realistic into looking at how do we look at the issue a bit more comprehensively. In a sense, we say climate, yes, it's a very important piece, but to us this has to be part and parcel of a much bigger lens that we call planetary repair. And at its core is the question that I said yesterday is how do you ensure that there are opportunities for socioeconomic mobility from individuals and communities through the active action of repairing our planet. Before we talk about sustainability, about frameworks, about SDGs, to be quite frank and honest, we're not only not progressing in them, we're degressing in a lot of ways. I think we've pulled ourselves in all sorts of directions, and we need to really invigorate our soul in how we engage with this issue. And at its core, remind ourselves that we're here to serve the people, we're here to go away from rhetoric, and we're here to ensure that there's consistency in what we're trying to deliver. And we hope we were able to succeed.
And I think that's very good. And you don't even need to bring up finance because talk is usually cheap, right? Talk is cheap. You need to follow up. And what I really like about what you just said, it's the people. It's the S in the ESG. And that S gets forgotten all too often, which is...
Can I say something, Cornelia?
Yeah.
I mean, you
Sure.
said I didn't touch on the finance, but that S in the ESG is very important. A conversation that we've had in confidentiality without naming some of the entities was about having a huge amount of money at some point last year that was meant to be bankable into some projects in Africa. And there was a huge commitment with meetings with heads of state of trying to deliver said promise. What ended up happening, because the projects themselves on the ground were not bankable, people did not have enough time to understand what are the capabilities, are they able to go beyond that threshold to get the money that's needed and necessary. We thought that there's a lack of projects. And we have to make sure that there's a way of pulling through that pipeline to be able to deliver the funds, because it's not a lack of funds, it's a lack of delivery mechanisms, it's a lack of understanding of how systems operate.
You're so right. And it's a lack of, as you said, bankable projects. And that's where, which leads me directly into the next question, which goes to Lee. You're well versed in all things climate and climate change and climate abatement and. One of the things, I used to work for a development bank, and I now do a lot of work with a development bank. When you look at the multilateral development banks, the private sector is one thing, but, how can they help the developing world? How can they serve as catalysts for the developing world to receive sufficient financing and also to help countries create these, what we said, bankable projects?
Yeah, thank you so much, Cornelia, for this question, and thank you so much for having me here on this really important panel back at the Saudi Pavilion. It's really an honor to be here. Just about the Cleaner Task Force really quickly, we're a global climate organization focused on overlooked solutions. So this includes solutions such as carbon capture and storage, nuclear, methane mitigation, hydrogen, and climate as an infrastructure problem. We focus on the US, Europe, the Middle East, and Africa right now. And I think when we look at developing countries, for us, energy access is the first line of defense against the impacts of climate change, which most of these countries are already experiencing extremely severely. And then it's also the building block for climate action, right? So that is, from our perspective, really fundamental. And when we think about MDBs, and it's interesting, I'm based between Washington, D.C. and Brussels, and when I say MDBs, people think, oh, World Bank, right? But there's so many more. There is World Bank Group, of course, and then the Islamic Development Bank, the New Development Bank, the European Investment Bank, whose balance sheet on climate is actually twice as big as World Bank. And when I look at these institutions, some of which have been in almost eternal reform mode, what we really would like to see is, number one, capacity building, supporting government capacity on the issues of energy, and climate. Because if each country or region has to build capacity from the bottom up, it will just take too long. So how can these institutions actually accelerate that capacity building, including also policy and knowledge sharing between countries? But then I think what we'd like to see is them really investing in analysis to understand needed infrastructure. What are infrastructure options for the future? Our Africa team did a review of most of the modeling of energy transition modelings for the African continent, and what they found is that the majority of it was published after the Paris Agreement. Looks as Africa as this one entity, not the 54 countries it actually constitutes, and excludes solutions such as carbon capture and storage and nuclear, right? So the information that is available for policy planning is very, very limited. So I think that's where MDBs, for example, could help, and in some cases have already helped. But then I think the big elephant in the room is interest rates, right? If we're looking at the weighted average cost of capital, which often is used uniformly in these institutions, but really what national data, granular data reveals is that it varies between developing countries, but it in any case is extremely high, 3 times as much as in developed countries. And so now we ask, right, we have some of the best clean energy resources, for example, on the African countries, but only 2% of energy finance goes there, and only 2% of capacities has been installed there. So I think that's where these banks can also come in with new instruments so countries can actually afford finance.
Yeah. No, it's very true, and these countries are crippled by the high interest rates because they have debt servicing that's very, very high. What we also need, we need more concessionary financing. You know, when you talk capacity building, you need the IDA type things, the grants. And that's a lot of them don't have that. So that's something that we really need.
Right, and just one example is we're talking about a new collective financial goal here at COP29, but the previous one only medium developed countries could afford them because they were the ones who could only afford the high interest rates, while others over the past decade experienced a tripling of public debt burdens.
And you're very right. And if you talk to people who are developing, let's say also on the, clean energy, they say, look, we are capital intensive, but because it's the O&M, the operation maintenance costs are low, but because of the high upfront capex and the high interest rates, it's a no-go zone. But we're now going to a man who knows all about finance and who knows all about my favorite form of finance, which is Islamic finance. Dr. Adnan, you are a certified Sharia advisor and auditor. And you understand Islamic finance like very few people. Could you elaborate on why Islamic finance, which is very values-based, can really be important in this space in addressing climate change, resilience, especially in the developing world?
Thank you, Dr. Meyer. I appreciate. I don't deserve the words with which you introduced me, but I appreciate. I'm still a student in this field and continue to learn from everyone. I also have to apologize that for some reason I had fever last night, and so I'm trying to recover hopefully, but I'll try to be as best as I can. Look, you're absolutely right. Islamic finance is based on certain principles which are value-based, as you said. In Arabic, we call it maqasid al-Sharia, okay, the higher objectives of Sharia. Your question about how can such an approach, which is driven by values, can be relevant for the developing world and in the climate space and the resilience in that sense. I must make one point that Islamic banking and finance industry, which is currently, there are different estimates between $3.5 trillion to $5 trillion, current size of the industry. 95% of that wealth is concentrated in the Muslim world. There are some in the non-Muslim world as well. And that wealth is primarily, but that actually needs to be mobilized in a way as well, because this is for the Muslim world we're talking about and the developing world. In fact, half of, more than 20 of the Muslim world is actually LDCs. So we really need to find a way to support them. The challenge, however, is that while Islamic banking and finance industry has grown over time in the last 5 decades or so, and it has also delivered on one of the values, which is making sure that it is delivering stakeholders' interests, which is profit, has it actually been able to deliver on other values? I must say and admit and acknowledge that there has been little which has been done in that space. Now, primarily, there could be a number of reasons, but one thing to mention here is that in the end, Islamic capital, just like any financing capital, is a fiduciary capital. So those who are managing it, they have a duty towards their stakeholders, and they have to protect this capital, they have to grow this capital, and they have to deliver returns to them. Now, the moment we start getting into the climate and the nature-based solutions, for example, the traditional notion has been that perhaps there is no bankability. We've been talking about that. I guess all of the speakers here have emphasized, and we can't emphasize more, that there is a need for us to find a way to mobilize this capital, and for that we need to create unlock the bankability potential, transform these opportunities into investment-ready propositions so the Islamic capital owners can come into it as well. Good news is we have identified a willing $100 billion per annum of a willing Islamic capital wanting to come into the space. It is what you said, pipeline. It is what you said, bankability. If we can provide that pipeline, there is, I would say that this also gives an opportunity for Islamic banking and finance industry to start delivering on the values on which they're supposed to be based in the first place. So this essentially is that opportunity.
That's very good, and it's very interesting how you combined it back to what your previous speakers said. Your Highness, you're Saudi national. And we have, we have the Saudi Green Initiative, but we have also the MENA Green Initiative, which the kingdom is leading the way, for a regional approach of addressing climate change and climate resilience, which goes way beyond energy. It goes, into land use and all of those things, food, all of planting trees. The kingdom also put in place the funding required to do it. It's great to have a good project, but no money, no project. How can the MENA Green Initiative, in your view, serve as a model to work with the developing world on climate resilience? What can other countries, other rich countries, learn from the MENA Green Initiatives in terms of especially also funding structures?
Yeah, I think, to be honest, when the policy was first being formulated, there was a huge sense of pride as a Saudi in the maturity of Saudi policymaking, both from the technical know-how but also from the responsibility perspective. First, from the technical know-how, if you're thinking about the Saudi Green Initiative, and if you're thinking about reaching net zero by 2060, and if you're thinking about the 30 by 30 goals and targets, all of the above, these are nice words, right, and frameworks, but all of which could not be achieved without the collaboration and co-funding and financing of other counterparts around the world. Be it through carbon use and storage, be it through opportunities for hydrogen, be it through some of the work that might be happening on protecting marine protected areas. I always give the simplest examples I find hits the message home. If your favorite fish that you eat on the coast of Jeddah starts its life on the coast of Sudan, without protecting the coast of Sudan, you won't have fish. So we have to think of things in systems. Another perspective that comes into play with the billions that Saudi Arabia has already put along the lines of what was promised for the MGI. I think we've always worked first and did not wait for others to crowd in. In some cases, that resulted in us being the only players within a space. We're okay with things to a certain extent, but if we are there to grow it and do things in a meaningful way, there has to be the co-contribution of everyone on board that will be benefiting. Again, with another simple example, as an asthmatic kid, we used to suffer from massive dust storms that used to increase to a point, especially end of 90s, beginning of the 2000s, the number of additional cases of asthma that has happened in the city increased over time. And guess what? Those dust storms were not initiating in Saudi. They were coming from a destructed delta in Iraq. They were coming from an ongoing war on the Horn of Africa. There needs to be that big recognition that without everyone working collectively and on board, we will not be able to achieve any of our goals and targets. So it's under that pretext that Saudi aimed to push for a Middle East Green Initiative. Great work by our colleague, Faisal Musa is here somewhere, with some of the work that they're conducting on the circular carbon economy knowledge hub, of trying to get everyone on board to understand what is needed from a skill set perspective, but also when we're saying from a skill set perspective, basic financing literacy on some of those issues. When we're thinking about the tree plantation efforts, the 10 billion tree or tree equivalent in Saudi Arabia was matched with 40 billion region-wide. And again, I think when we're saying Middle East Green Initiative, if we saw the map of the Middle East, we're stretching that word a bit thin, because it goes all the way from Pakistan to Morocco, but also further south. There's representation from around the world.
Sudan, yeah.
We see that as a really big potential icon of hope and delivery, inshallah.
Yeah, it's very true. And what I really liked is when I say, you need to walk the talk and you need to lead by example, which the kingdom has done. But if you lead, there need to be people who follow, because that's part of what leadership is all about.
And I just added one more bit, Cornelia, and I know that this is happening in the context of COP. I was asked by one of my friends yesterday about one of the reports that we published with our colleagues at KAUST and CAPSARC, which I thought was extremely important, trying to understand what are the impacts and implications of the 3-degree world on Saudi Arabia, both from understanding the risk perspective, but also where we need to direct our finance. Right now, in multiple conversations with colleagues, they're asking us, where are you getting funding and financing for climate adaptation, for climate resilience? It's happening, but we cannot quantify it, right? But what people forget in these conversations, between the ebbs and flows of how do we define a certain term, this is the crux of the matter of our conversation at COPs like this. It's not that we do not believe that we have a very serious issue that we're trying to tackle. It's that we have a core belief when we say climate finance, you do not get to stop behind podiums and pontificate to me about what qualifies as climate finance by saying, oh, CCUS is not a good thing. I remember, without naming names, head of UNDP 10 years ago or so. I know you're nodding. I'll end with this. 10 years ago or so, me telling her, well, what are you doing about funding and financing CCUS? And she said to me, we disagree with CCUS because this is not within our agenda.
Don't laugh. I mean, I sort of tend to hang out in quite a few of the talk shows on European TV. And every time I mention CCUS, I get laughed out of the room. And I'm sure Lee has had similar experiences. From the vantage point of the Clean Air Task Force, how do you look at financial institutions cooperating on climate goals? I mean, under the umbrella, especially of GFANs, it was interesting. Somebody came out just about 2 days ago saying GFANs can contribute $1 trillion to this. I'd like to see it, because it's it's commercial institutions who will do commercial things. Are you concerned that the pendulum, which swung very much in terms of regulatory environment towards climate and banks, there's a lot that banks couldn't do. For instance, it was even hard to do CCUS or CCS. Are you worried it swings back too much towards the other end? And what can we do to keep a nice middle road so that investors know what they're dealing with?
Yeah, thank you. That's a really big question. I'll put my own spin on it. But I do want to say one thing in defense of the Europeans. Carbon management, actually, I would say, is now a widely accepted solution. We've had the Carbon Management Challenge, which the EU is actually part of. And the EU also has put in place a carbon management strategy, and other countries have followed suit, including Germany, for example, where it was really controversial for the longest time. On the financial institutions, I think our experience with the sustainable finance taxonomy is one example, GFANs another. I really want us to look at this as a learning experience on how the financial sector can actually contribute, because I think there has been the notion in the past that we were just going to bend their business model and they'll just have to give their money away. But in the end, we have to build a business case around solutions. And what I think we're waking up to is now, how do you go from VC to development capital to actual project finance of at-scale solutions, and what is the business case that will enable this? When I look at a lot of the big projects that are out there right now, they're often either heavily government supported, or had some sort of government intervention, or they're balance sheet backed by the tech and oil and gas sector, right? But these are not infinite sources. So I think what keeps me up at night is, how can you actually build a business case around first mover projects when, of course, you're still competing with the old system that is advantage from a cost, from an experience, from an on-time perspective, and that even gets harder as governments, particularly in the West, have less to contribute, right? Because we're really looking at an age of really shrinking fiscal headroom. So I think I want to look at that as a learning experience and see if we can have a kind of envision dialogue, because what I feel is often forgotten in the climate discussion is the emissions reductions don't happen if you pass policies or goals. It's when you build infrastructure, right? And that's the hard part. It's not the hard part, unfortunately, is not agreeing on the goals. It's getting the money on the road, on time, on budget.
Absolutely, that's absolutely right. And one of the things that you've mentioned, and that always worries me, is, you're right, it's a learning experience, but whilst it's a learning experience, there's quite a bit of misallocation of capital. And that's something that I've had a talk with somebody who runs GFANs for a very large financial institution, and I said, but hasn't the pendulum swung too much one way? And she said, yeah, but we're learning. I'm like, yeah, but whilst you're learning, you're misallocating capital, or capital cannot flow where it needs to go. Now we're coming back to Dr. Adnan. You're the chief programs officer of your institute. How can you influence policies in developing economies addressing how financing structures can be found, and for projects, the pipeline, abating climate change, as well as putting in place measures for climate resilience? Also, how can Islamic finance products, such as green sukuks, and an organization we both know well, the Islamic Development Bank, is the fourth largest issuer of green sukuks, and there's another one just coming out. How can they help such policies?
Thank you, Dr. Meyer. I think, you see, what you actually answered this question earlier on between yourself and Her Highness when you're talking about it's walking the talk, right? If you really want these developing world is influence, and actually it's less, I would rather not use the word influence. I would say, if we really want to motivate them to adopt certain policies which we think are good for them, we have to demonstrate that this actually works for them. So what in GIFP, for example, in our program, the way we do benefit and look at all the sustainable finance frameworks, Rio markers, or maybe ICF, or whatever it is, but we do take guidance from that. But in our approach is to customize it to the country priorities. Our approach is to understand what's the enabling environment in a given country, and then what we also feel is that the way we have designed this program is to actually we have structured it this is structured in the form of a global fund structure, investment fund, in an umbrella fund in Luxembourg, which also has Article 8 and Article 9 compliance of EU for it to be able to deliver on impact and return both. Now, our aim is to run private equity, venture capital, and then on the finance, that side of it, project finance, as you mentioned, but also, Sukuk as an instrument for that matter. Sukuk is not the only instrument. That's also a misnomer. Unfortunately, we have had heavy reliance on it. The opportunity for us to have Sukuk issuances at scale is going to be when we have a pipeline to support it. So that is what this program aims to do. It wants to deliver that pipeline. It wants to become a manufacturer, a factory, providing that pipeline so everyone can come and join hands. So in the end, what I would say is, what is important for us is that if we really want to become the advocates, and if we want developing world to adopt anything, we want to demonstrate to them that following this approach, we are able to create assets within your country, and we're able to deliver a resilient economic growth for yourselves using this as an approach. If they do see that, then it becomes a natural acceptance for them, to consideration for them to accept and adopt such policies.
Yeah, that's very true, and it's that ability to do things at scale. But as Her Highness said, it does take that pipeline also of the bankable projects. Now, you're very lucky. These are, three thought leaders in this, three of the best thought leaders in this sphere. So I would like to make this very open, and I will ask many questions if you don't ask questions. But I'd like to have this to be a dialogue, to have it interactive. Is there anybody who would like to ask a question? And could you tell us the person that you would like to ask it to, and also tell us who you are? It's always interesting to know who asks the question. Anybody? Any hand up? There must be somebody. There must be somebody. We want a discussion. We want it interactive. Yes, madam. Let me give you my mic. There's a mic.
Meyer.
Okay. Thank you. My name is Balghith Osman Al-Asha. I'm Chief Climate Change Specialist in the African Development Bank, Regional Coordinator for North Africa. My question regarding the unlocking finance, especially bringing private sector. And we always speak about creating the enabling environment for the private sector to invest in climate-related issues, but steps-wise, we don't have that. What exactly needs to be done so that it will create like an incentive for the private sector, for example, to invest in adaptation projects?
Who would like to answer that?
Thank you.
Sure, I can give a take. That's definitely not my area of expertise. But for me, honestly, and this is a comment that I wanted to make earlier, my sentiment is that we're always a little bit slower than where the curve needs to be. When we were saying, do not say adaptation, focus on mitigation, climate hits us, and now we talk about adaptation. We're saying focus on climate mitigation finance. The adaptation part of it is not as attractive, because what you're saying to countries, that in essence, you try to have to safeguard countries among some of the impacts that they might be facing. I'm talking maybe in particular about some of the parts of Africa where there needs to be a reframing of the issue. So instead of thinking just about adaptation solutions that could generate funds and money, whether it's in shoring up methods for agriculture that make the whole sector more climate resilient, whether it's trying to look more creatively at some of the financial tools, but that are scalable. Again, my sentiment is that we're still doing things at the site or the size of a pilot. We're nowhere near the level of maturity that is needed to be unlocked. There are so many innovative tools that are being tried and tested in one place versus another. And to be honest, in some parts of the world, there's an inherent bias that's not justified. It's a sheer fear of going into the space with your own money, whether it's in the Caribbean, in the African continent. It's not about what logic is dictating. It's about the sentiment of people. And that's another aspect that I think needs to be addressed a bit more consistently. But
I would just want to say there's probably something that everybody should say something about. Let's go with Dr. Adnan and then Lee.
Thank you. Just to add to what Your Highness you have mentioned, actually. You see, it's how to incentivize private sector. Maybe some figures would help you. I mean, what Her Highness has mentioned already that there are a lot of new techniques and innovative attempts have been made. Some have been more successful than the others. In blended finance, which is the model which has been tried over the last 10 years or so, more actively, $231 billion has been mobilized using blended finance as an approach within climate and nature space. Now, I have to admit, most of it has gone into mitigation, as you rightly mentioned, but not to say that there hasn't been any attempt for adaptation in that. And I'll tell you where the possible solution lies shortly as well. What is important to note here, however, of that $231 billion, 2/3 of that came from private sector. Top 10 names included banks and financial institutions, the likes of HSBC, Standard Chartered. You would typically not hear about those financial institutions coming in. So the reason they have come into it is essentially what we've been talking about as a panel here, bankability. It is because we have made those, so essentially what we have done in a blended finance mechanism, it is about sourcing the nature and climate positive opportunities, transforming them into investment ready propositions, mobilizing impact aligned commercial capital in the hands of private sector, but also, let's not forget, the big trillions are also with some of the sovereigns, which is also commercial capital. Yeah. So the commercial capital in the hands of sovereign wealth funds and the private sector, that impact aligned in that sense can be mobilized. Initially, the concessional funding, as Dr. Meyer said, but then using that to create a pipeline, investment ready pipeline, and then bringing in a blended finance fashion with a de-risked portfolio, allowing for the commercial capital owners to take part as well. Bear in mind, in adaptation in particular, it will not be possible for $100 needed in a project for it to deliver financial returns at a market level for all 100. So the best approach is to bring in some of the blending in it, and then have part of it, maybe 50, 60, 70% of that coming from the commercial capital owners, which are able to get the returns they're seeking at a financial, commercial or market level of that. So I guess, and the approach here is, last point to make here is, approach here needs to be at a portfolio approach. So mitigation still continues to be a darling for them. This is accepted. But we also need to advocate and engage them into adaptation. The way to do is a portfolio mix. So bring them into mitigation, incentivize them there, but ask them to take a hit, accept a lower return on adaptation to start with, and over the period of time we make a case for that adaptation as well. That's what we see is potentially, this is where the appetite lies. I'm speaking from engagement with Islamic capital owners in particular.
Okay.
Thank you.
Lee, I think you have a lot to say about this as well.
Yeah, thank you so much for this question and joining us here for this panel. I do want to double down on what Your Highness said about the perception issue. I think that is huge and really needs to be worked through. But the other, I think, is the mismatch of policy planning with capital cost realities, right? So there's high capital costs, but then policy studies suggest we should only be using solutions that are actually quite capital intensive. And I think what I always struggle with the climate finance conversations, either up here or down to a project, but we never actually think through, let's pick a country or let's pick a region and think through kind of systematic planning of infrastructure, policy that's needed, and then how can this be financed, and take all stakeholders through this effort. I think that's one effort that hasn't been done. Again, the capacity isn't there, but that's what I would like to see. And I think that going back to your question on MDBs, Cornelia, this is another area where I know the MDBs are doing a lot of work, but they can even do more.
Yeah, and I would like to bring in one thing. I would like to bring in one thing here, which is when I used to work with one MDB, and I ran the Pakistan program, and I told people what to do, and then I started working with somebody we work with the Islamic Development Bank, and there the approach is so different. We sit down with people and ask them, what do you need? Okay, yeah. So we ask them, thank you. So we ask them, what is it that you need, rather to tell them, and then there's a dialogue. There's sometimes, when you ask people what they need, they come up with unreasonable demands, but you then bring that down, and I think we need to listen more generously. Financiers, countries, and everybody needs to listen more generously. I would say we have time for one more question, which can go to one person, and then I will do a short summation. Back there is a gentleman who would like to ask a question. Please identify yourself and whom you are like to ask a question to.
Okay, thank you very much. My name is Saki Nalusha, and I'm from Namibia. I'm from a startup company called Kaoka Green Energy Solutions that is focusing on 3 thematic areas of business. But my question may be to Her Highness directly regarding project and restoration project around Africa that could also act as a financing mechanism towards the global south, because there has been, from our understanding and also from our observations, there has been a kind of a skewed allocation of capital toward the global south that is heavily affected by the climate change, and I think specifically for that topic we are here today at COP to look at how do we then channel these finances towards a lot of countries that are affected. Perhaps Africa has a lot of resources in terms of, for example, restoration of forests that developed countries can also use that as a project financing in terms of carbon credit and stuff like that. What is the take of Saudi Arabia from that aspect?
So I cannot speak on behalf of Saudi Arabia, but I can speak on behalf of my perception of it. I think one very important fact that we've tried to unpack, and maybe as a Saudi, I can take pride of the work that our colleagues here at the ministry, especially with the negotiation team and Mari El-Jishi, have been spearheading in terms of finalizing some of the aspects of Article 6.4 that all of a sudden put the right kind of frameworks of dealing with some of those issues. And I think the bulk of the standardization was really focused as an initial area of focus on carbon capture, use and sequestration. But one of the things that we're trying to explore during COP16 is to try and lend that same approach, let's say, to the standardization to nature-based solutions, specifically focusing on arid and semi-arid regions. I think, again, that issue of perception is another one that hits us true, right? The focus tends to be about the slow growth of our trees. The focus would be, okay, this grows so slow that it captures X amount of carbon. But the real focus, if you went down to the calculus, in a lot of those types of ecosystems, is the ability of the soil to store carbon. So without having a comprehensive framework that lacks the bias in how we treat our parts of the world, then none of it will have a clear pathway forward. That's honestly another part that really aches me, is the price with which we're currently pricing some of those assets and nature-based solutions in the continent of Africa that are far lower than the costs that are really needed. Not only lower, sometimes you need to pay more just to abide by all of the rules and regulations of some of those systems, which make most of those projects unviable. So we need to do better.
Thank you so much. So I will just make a very short summation. What I've heard is it's about pipeline, having the right projects. It's also about bankability. And what you brought in here is about the correct pricing also of the project, especially when we are dealing with voluntary carbon trading schemes and so on. We have looked at various sources of financing and how the MDBs can contribute, and how we need to look and I was so happy that you said that we need to look broader with the MDBs than just, World Bank, EBRD, ADB, and so on. We have IDB, we have the Arab Coordination Group, who does great work on these things. We need to be very specific in policy planning and looking at capital costs. So we can't have policy planning here and capital costs here. We need to create that linkage. And the learning is open-ended. Islamic finance clearly has a big role to play. And what I really like that you said, Dr. Adnan, is when you said, look, we need to have a portfolio approach, because some things will fly Some things won't fly. So unless you have a portfolio approach, nothing will fly. But in the end, it's about walking the talk, as Her Highness Princess Mashael has said. So thank you so much to this wonderful panelists. Please, they're wonderful. Give them a big round of applause. Thank you.